a few things to discuss on today's update video. We're gonna quickly go into Bitcoin and then we're gonna go into silver, because silver has actually made a massive move today, which you can clearly see here, actually outpacing gold by quite a bit. So without further ado, let's get started going right into Bitcoin. And what we can see for Bitcoin is that we're still very much doing nothing. Bitcoin is boring, and what I think will happen next, and where I can probably see a trade opportunity, is if we break above basically this top side resistance. And if we do break above, I do think that we might be able to retest this 200 simple moving average line. And the 200 simple moving average line is important. Why? Because if we go to the last bull market, right, which is the top of the last bull market in 2022, which is right here, and these are just the yearly lines, I can remove them, they were from my last video. If we go here, this was the top of the last bull market, right? We went back down, we had a double top, the first top and then a second higher top, which was around 69,000. We went down and then we retested the 200 simple moving average here before going further down. And the same thing we can probably, in my opinion, see happening right here today. So if we retest the 200 simple moving average line, then we could take a long position, probably around about, let me zoom in a bit, around about this level 90, around about 91.8k, and target the highs here at 200 simple moving average line. The line of course will continue going down because we are currently below that line. So the target is around about 107 or lower, and we hedge our risks by putting a stop loss below the recent lows. Now, what I think could be a better position to take though is to short from the top side down. So we take the short from here, from this 200 simple moving average line, so anywhere between maybe 100 to 107,000 for Bitcoin, and then we target the lows as we go up, and we continue going down, because keep in mind we are in a bear market right now, so taking shorts might be a better thing to do. And of course, if we break down from here, so if we do not hold the resistance and we break down, where do we target? Well, we target right here, the grabbing the liquidity here at the bottom, which is around $74,000 per Bitcoin. Now, that is it for Bitcoin. Actually, one more thing to note, I want to talk about the volatility for Bitcoin. So on this screenshot here, we can basically see Bitcoin's volatility on the daily candle since January 2020. And we can see the number of days and how much volatility there was. So we can see that actually Bitcoin is not that volatile if you think about it. Most of the time, Bitcoin has a daily volatility of between 1 to 3% and also 3 to 5%. So you can see that 65% of the time, Bitcoin's volatility is less than 5% on the daily. While yes, it is of course rather volatile if you compare it to other mature assets like the S&P 500, but it is becoming less and less volatile, right? And only 7.8% of the time, Bitcoin's volatility is more than 10% a day. And these days are what we need to make, to be able to trade and to benefit from the market. So most of the time, Bitcoin is very boring. And I just want to remind you guys that these times like right now, where we have daily volatilities of, you can see here on the top side, 0.5%, 1%, almost 0% volatility in a day, this is completely normal. And we have to wait for the times when Bitcoin does get volatile, and that's when we get rewarded for this. Now let's go into silver, okay? And silver, look at this, guys. Silver has today actually reached a top of basically almost $84 per ounce, right? Which is here. And if we zoom out a bit, we can clearly see the massive rally that Bitcoin has managed to make over the last few years. And especially if we look at this year, I mean, Bitcoin has made a massive increase this year alone. If we go here on January of 2025, you can see Bitcoin has gone up almost 160% in one single year. Now, if you compare that to gold, gold has also made a rally. Gold has been going up fairly stable. It's a very similar pattern to silver. Silver is a bit more volatile, but gold, for example, has not gone up as much as silver has gone up, right? If we go here to January, oops, we are here in January. If we go to January, I think gold has gone up like 70% or so. Yes, 70%, exactly. So gold has not gone up as much as silver. And well, if we quickly analyze what has happened here in the market, we can clearly see silver has gone up almost 150 to 170% this year to date, and reached $80 per ounce. Now it has gone down a bit today, actually, while gold has only gone up around 70%. And we can see this on a comparison chart right here, which compares gold, silver, and platinum. And you can clearly see that silver and platinum have clearly caught up to gold. They've all rallied very massively in 2025. And now we're gonna look at a few of the reasons for why this is. And many of these are the supply shock reasons, right? So firstly, silver has a supply deficit. So there's a lot less silver being produced globally than there's demand for it. Globally, there's around 100 to 200 million ounces yearly where there's a deficit, right? We are missing 100 to 200 million ounces yearly, which are needed in industries. So where do we need silver? Silver is required for solar panel production. It's also very much needed for electric vehicles. And we both know that these are evolving industries and they're growing industries. And they're also needed in electronics, AI centers, and 5G, so different power needs. And we all know that these are growing industries, and every year we have a supply deficit. Since 2020, there's around 800 million ounce deficit cumulative. And of course, a deficit means there's more demand than there's supply, which will increase the price. Now, another reason why silver has gone up this year is basically expectations of, weaker US dollar. The US dollar has fallen. We had inflation, expectations of further rate cuts. We are obviously still rather high, and the interest rates are expected to further go down. But now, what does this mean for Bitcoin? If the interest rates are high, it makes sense to hold US dollar, to have bonds, to invest in the US markets. But as the interest rates go down, I get less return on my US dollar, and I'm gonna start looking for other investments, such as silver, such as gold, such as Bitcoin, of course. And finally, of course, it's just a speculative market. And now, one thing to note is about the supply fears from China. So China actually implemented these restrictions which are gonna start 1st of January. I've got it right here. We can go through it together. So on the 1st of January, China are going to have supply restrictions set by the government. So basically, all silver exporters must now obtain a government license to sell Bitcoin, I always think of Bitcoin. I've got my Bitcoin right here to sell silver. So what does this mean? Why did China implement this? Well, first of all, they want to, of course, keep that silver for themselves. They have a local demand for the silver in their own industry, but also geopolitical tensions, right? If they have a restriction for keeping the silver, they have a leverage on these negotiations that they can then say, okay, you will get some silver from us. And that expectation that there's going to be more shortages for silver starting on the 1st of January, of course, it's going to increase the price and result in what we saw here, where Bitcoin just shot up massively, especially just in December alone, it went up almost 30%. Now, if we look at the market and we zoom in a bit on the daily, we can see that silver actually went down almost 8-9% today, from a high of like $83-84 per ounce. So why did silver drop today? Well, a few reasons. Obviously, profit taking after extreme gains. We've seen silver massively outpacing gold, going up almost 170% year to date, which is crazy and a very good investment if you did have silver. Now, another reason is there's a new rule announced on December 26th for futures positions. So basically, let me go to where it is. And there's an increase in initial margin requirement for position holders. So basically, in order to open a futures position, you don't need to, you just need to put a certain margin down. Same with crypto trading with leverage. You can take leverage on the trade, and you just need to put a margin, which is your initial kind of deposit, which if your position goes below your point, your margin point, then you will have to use that money to cover your position, which is used as a deposit, right? If now they increased the initial margin requirement, and they actually increased it, they mentioned it here, they increased it to $25,000 per contract. Before it was 20,000. Now it makes it more difficult to enter the futures position market. So this just, again, is not good for the market. And why did they do it? Well, because silver was so volatile, we're trying to protect the market participants from getting screwed over. So it makes it, the barrier to entry will be higher. Okay, easing political tensions. Well, actually on Sunday, Trump made a comment about Ukraine, that they're coming to a deal and that things are becoming better. And usually these assets are risk-on assets, and they perform good when there are tensions, right? Gold, silver, Bitcoin, they usually are hedges against risk, and people invest in them when they think that the US dollar might not be doing that good. So they invest in these assets to hedge their risk. But now, seeing that things might be going better, this might have caused that people are selling off their silver. And finally, we had, of course, high leverage in the markets. And given that on January 1st, China is gonna have their supply restrictions, people are just selling already, and year end, people trying to get in the profits. And with that being said, that's the video for today. Hope you guys enjoyed it. It's really interesting to see what will happen to silver actually over the next few months. And what I think personally will happen is that we can go higher, but because silver is dependent, industries are dependent on silver, like the EV industry, the solar panel industry. If silver reaches a price point which is way too high, it's gonna not make sense for these industries to use silver anymore. It's gonna become too expensive for them. And therefore, I think there's like a natural cap for silver. I keep saying Bitcoin. There's a natural cap for silver where it might be difficult for the price to go higher, as it's just too expensive for these industries like a solar panel industry and the EV industry to use silver. And therefore, it's a natural cap. And therefore, ladies and gentlemen, invest into Bitcoin, because there's no industry that's relying on Bitcoin. It's not a natural resource like silver or gold. Now, gold, of course, is a jewelry item, like people use it because it's used in jewelry and as investment, but silver is more so used in industry. And therefore, invest in Bitcoin, guys. Bitcoin is not, there's no industry dependent on Bitcoin, really. It's a independent assets resource. And therefore, my advice to you guys, invest in Bitcoin. Okay, see you guys. Bye.